Alright, hey everybody, this is Scott here again with a new video, and for this one here, I'll be talking about how you should be changing your profit targets after making any adjustments to your existing options selling positions with the intent to collect additional credit. So of course, this applies to credit spreads or cash secure puts, strangles, straddles, iron condors, anything like that. And again, whenever you make an adjustment to a position like that to collect additional credit, you're basically going to be changing a key characteristic of that trade. So therefore, as a result of that fact, you should also be changing your profit targets to reflect your new trade essentially. And so specifically for this video, I'll be walking you guys through a very detailed example on Coinbase that's going to illustrate the concept of rolling, either to extend the trade's duration or make an adjustment. But in either case, you're going to collect more and more credit. And therefore, like I said, your profit target must be changed as well. Now, real quick though, in case any of you guys are interested in getting some free stock or quite literally some free money, I've got some very cool opportunities and promotions in the description of this video, so check them out. Right, for example, if you want $200 of free stock from Tastyworks or a bunch of free stocks from Webull, free money from SoFi, etc., then again, check out the links in the description of this video. And secondly, in case any of you are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for Skillshare using any of those links, you'll get a full 1 month free trial. Alright, so now diving in here, and like I said, our main example in this video is going to be Coinbase. COIN is the ticker symbol here. And so briefly to give you guys some context around our example trade, let's go ahead and zoom in a bit here on the chart. And so let's say that you have been bullish on Coinbase for quite a while, especially given that this stock has sold off so much in the recent few months here. And perhaps around this point, which was back in mid-May of this year, you wanted to play for a short-term bounce in the stock price. And so as a result of that, you sold an out-of-the-money cash secure put option. And so obviously, as you can see here on the chart, for a couple of days, you were actually correct in your trade. Coinbase was bouncing nicely, but unfortunately, fast forwarding to the present, Coinbase has unfortunately continued moving a whole lot lower. And so of course, this is the exact kind of situation that would warrant making an adjustment to your position or perhaps rolling out in time to the next expiration cycle, and in either case, collecting additional credit. Now to get more specific with this example, let's now come over to the trade tab and take a look at the June monthly expiration cycle. So we're going to assume that it was this cycle here that you chose to sell your put option, which now, fast forwarding to the present, only has 10 days until expiration. And in particular, you decided to sell the 75 strike put option, which you can see here. So again, at the time you made the trade, this was definitely a pretty good position, right? Because once more, if we come back to the charts, at around this point, Coinbase was at $112 per share, which was super far above your 75 strike all the way down here. So a very high chance of profit on this trade, but unfortunately, just as luck would have it, Coinbase moved against your position by a lot. And now with only 10 days left to go, you have to make a decision as to how you want to manage this trade. Moreover, coming back to the trade tab again, let's also say initially when you sold this put option, perhaps a few weeks ago, that you initially sold it for a starting credit of $500. And also that your starting profit target was to make 50% of that $500. So that means ideally, you wanted to buy back the put option for a debit of only $250. And in fact, if we now come over to the monitor tab real quick, right here, as you can see, this is my closing order for that Coinbase put option to buy back the 75 strike put option here for a debit of $250. So essentially, if I pull up the calculator real quick here, if in our example, we sold that put option initially for a starting credit of $500 and then wanted to buy back the put option for a debit of $250, that means the profit on the trade would be exactly $250, which is 50% of the starting credit. That's the initial profit target. All right, so now with all that being said, let's come back to the trade tab again here. And now that I've laid out the full context behind this example trade, again, at this point, you have to decide what to do with this trade, given that there's only 10 days left to go until expiration, right? Because at this point, if Coinbase continues to move lower from here, then you do run the risk of an early assignment, or if you do nothing by the expiration date and Coinbase is still where it's at, you will definitely get assigned on the actual expiration day. Now, of course, with some cash secure puts, that actually might be part of the plan, but if in this case you wanted to avoid assignment altogether, then you must make an adjustment here to roll your contract to the next cycle. So with that being said, now let's come back to the monitor tab and cancel my existing closing order on this Coinbase trade, right? Because once I move this contract to the July cycle, this order here is going to be completely irrelevant. So I'll right click here and go to cancel order. And then I'll come down here to the unallocated section, which is where my Coinbase example trade does exist. And if I unfold this tab here, as you can see, I'm short one contract of the 75 strike put option in the June cycle. So I'll right click on this trade here and then go to create rolling order. And then finally go to this option right here. Click on that. And here we go. So basically in this one order, we're going to buy back my existing 75 strike put option in the June cycle and then sell a brand new contract in the July 15th cycle, which is right here. And then now, as you can see over here, the additional credit I will collect by making this change here, or this adjustment, is $415, somewhere around there. So of course that means if my starting credit on my June put was $500, and now I'm going to collect an additional $415, that brings my total credit to $915. And that's the reason why I must now change my profit target a bit to reflect this new total credit, right? Because if my initial closing order was to buy back my June put for a debit of $250, well, if I were to use the exact same kind of order on my July put now, the profits I would be shooting for in that case are going to be wildly different, right? So for example, if I bring back the calculator real quick here, again, this was my initial profit target of trying to make $250 on my June put. But like I was saying, if my total credit collected now on this position is $915, and I still use the same kind of closing order to buy back the put option, my July put now, for a debit of $250, that means the profit I'm now shooting for with that order is $665, which again is way, way more than my initial profit target of only $250. And moreover, if we scroll down to the July cycle and take a look at that 75 strike put option in July here, the current price of this put option contract is about $1,400. So again, if I try to use the exact same closing order to buy back this contract for a debit of only $250, I will have to wait a very, very long time, right? Because basically the price of this put option will have to drop by over 80% just to get down to a price of only $250. And so having explained that, let's scroll back up to the June cycle now. So now with all that said, let's go ahead and make this order official here. And as you can see, the credit actually dropped now to only $395. That's because the prices on these Coinbase contracts are definitely a bit wide. So perhaps I'll come down even further to maybe $380 and see if I can get filled here immediately. So now we'll go to confirm and send the order. And there we go, just got filled at exactly $380. Awesome. Great, and so now as you can see here in the June cycle, you no longer see a red position flag next to the 75 strike put option here, so I'm officially out of my June put. And now if I scroll down to the July expiration cycle, now as you can see there, my new position is in the July contract still with a 75 strike. And so at this point, I've successfully rolled my put option contract and collected an additional $380 of credit, which therefore brings my total credit from $500 initially to $880 now. And so now that means the final step here for this trade is to create my closing order on this put option to buy it back and book my profits, assuming Coinbase does recover. And I still do want to make the same $250 I was initially targeting at the beginning of this trade with my June contract. So now I'll bring back the calculator one last time. And again, if my total credit now at this point is $880, and if I still want to try and make the same existing profit target of $250, then all I have to do is subtract $250 from my total credit at this point. And the result there is $630. So now this here is the debit I must pay on my new closing order to buy back my July put option to still make that same profit target. So with that said, I'll now go ahead and click on the asking price of this July contract here to bring up a buy order down below. As you can see here, this order is going to buy back one contract of the July 75 strike put option, and we'll do so for a debit of $630, or $6.30 on a per share basis. Then finally make it a GTC order so it's always in place, and then confirm and send the order. And so there you go. I've officially moved my put option contract to the July cycle and avoided any assignment. I took in additional credit, and as a result of that, changed my profit target to reflect my new position here. So basically, I'm still trying to make the same amount of money. I just wanted to give myself much more time to hopefully make that amount if this trade ever does turn around. And then also one more thing to mention here is this was the first way to roll your contracts, basically roll out in time. The second way is to basically roll the untested side, which essentially means in this case here is the side of the option chain, which right now is being tested by the stock, is my put option. So the put side is being tested, but the call side, if I had a corresponding call option over here, is not being tested. Now in this case, I don't have a call option at all, so I can simply sell one here, any one here, and collect additional credit as well. So perhaps, for example, I wanted to sell the 95 strike call option here and collect almost $200 of additional credit. And then at that point, if I wanted to collect even more and Coinbase continued to move down lower and lower, I could roll down my call option, basically buy back the existing one and sell a brand new one that's closer to the stock, and again, do so for even more additional credit. And really, it's in that scenario when you do already have an existing call option here that if you were to roll it down, you would be rolling down the untested side, essentially. But the bottom line here stays exactly the same. You simply look at your total credit collected, and then you go through the exact same steps I've outlined in this video to calculate what your profit target or your closing order pricing should be. Except, of course, the main difference in this case with selling a call option to defend your put option, which is in the money right now. The main difference here is your closing order would not be to just buy back your put option, but instead it would be a closing order to buy back the entire position, which basically would be a short strangle in this case. But again, everything else stays exactly the same. What was your profit target on your existing position with your initial credit? And then based on your now total collected credit, simply calculate what your closing order price must be based on your initial profit target. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want some free stock or some free money, then check out the cool promotions and opportunities in the description of this video below. And also, if you have an interest in taking some detailed classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links also in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.